As a trader, you probably understand that liquidity is one of the most important parts when it comes to any of your technical analysis. It's the whole reason why markets actually move in a certain direction and why they even reverse from a certain point as well. Now, the one thing that a lot of people actually skip past is the fact that liquidity must be paired with certain times in the day. Now, the reason we actually do that is so we can get these A+ setups. Now, usually a beginner who trades smart money concepts or ICT concepts are just going to be trading liquidity sweeps at any point in the day. The one thing I've come to realize after numerous back tests and after numerous journaling of my own personal trades as well, there's certain points in the day that we actually get these A+ setups. So throughout this entire video, I'm going to be going through the exact entry model that I use personally and then getting into a few examples onto the chart where we can actually show you this in real time as well. So let's get straight into this video. So before we can actually get into any of the entry models and exactly the times that we use throughout the day, we must explore first of all the basic concepts of liquidity. Now we've got 4 main types. A lot of people would say we've got 3. In my opinion, the 4th one is one of the most important pieces. But before we get into all of that, the first type of liquidity is we've got equal highs and equal lows. Now, a lot of people might just show you this diagram and say, okay, this is the basic version, but how do we actually use it? And I'll tell you my little entry model that works very, very well. And honestly, it's just a high level of confirmation that you can actually use for yourself. So what you're going to identify is essentially a support or resistance zone that's actually been formed, but at the peak of wicks. So something like this where there's been multiple touches around a certain area. Now, typically it can be in the form of just 2 waves. It might be even be 3 or 4. One thing I must note when it comes to equal highs and equal lows is it doesn't have to be perfect. It's just essentially it's a general area where there's a stack of orders lying just above this zone. So in this particular example over here, as you can see, multiple touches. We've got 1, 2, 3, 4, 5 touches in this general area. Now what price actually decides to do is to come straight to this area. As soon as you see that there's a nice little wick candle forming around this point over here, where the body is not really closing above the area, that's where essentially we've got to think in our head, all right, we might have some sort of manipulation. As soon as that happens, that's where we're going to get a minor change of character, a little pullback, and then essentially this right here, where you've got a very strong engulfing candle going the opposite direction. That's when we know we've got a strong setup coming in the opposite direction. So example number 1 is all going to be about equal highs and equal lows. And now moving on to liquidity type 2. This one's going to be very simple. It's a piece of trendline liquidity. Now it can be in either direction. Now the one thing you must know is how do we actually use it when it comes to having these liquidity sweeps? Well, it's essentially taking the opposite side of the direction. So let's just say, for example, we've come up to this kind of point over here where we actually sweep that liquidity. We might even reverse it to the other direction over here. So a lot of breakout traders might actually think, all right, perfect. We're going to be sweeping that over here, pulling back and then essentially dropping down. But no, when it comes to trendline liquidity, you're basically taking the opposite direction. This happens both to the upside and then also to the downside. And I've got one little quick example to show you guys straight over here. So as you can see over here, market has been moving upwards. It's broken this piece of structure over here. And as soon as we get that in multiple areas, price starts to push down. We've got this low, this high, low, high. And then finally, we start to see this area being broken again. At this point over here, we can assume that price is going to be heading to the upside. But before it even does that, what price has actually discovered itself in doing is this piece over here. It's targeted all of that trendline liquidity right there. And rather than just reacting off this order block zone and just going straight up, what it's decided to do instead is literally sweep this liquidity over here. Now, the one thing you must know is when it comes to trendline liquidity, you aren't completely sure of exactly which leg it's going to react from. It may be all the way at the bottom. It may be somewhere around the middle. It really does not. There's no particular rule book when it comes to something like this. Just be wary that as soon as you take any of these levels over here, that's where you might get a potential reversal. And again, the same rule applies. How do we actually enter on these trades? All you're going to be doing is you're going to look for a minor change of character, this little pullback over here, and then finally get into some of the price action over here. And that is finally where you're going to be getting into your trades. And as you can see, it's pretty much just aiming for something as clean as this. Aiming for the high at first, and then obviously the next liquidity point right at the top. So that's going to be part 2. Now, before we get into some other examples, I just want to show you one of the best backtesting platforms out there. And the reason I can confidently say that is simply because I've put in the time as well. Over 10 years of data tested to get to the point where I am right now. And the reason I say FX Replay is genuinely one of the best platforms out there for backtesting is because of the metrics and also the fact that none of it is in hindsight. So you can actually see how it is as if you were live trading in the markets. Now, if you do want to go out and use it, I have got a nice discount code for you. If you use Diamant Capital at checkout, you will get 15% off. So click the link down below and go ahead and put your discount code in. And so now moving on to liquidity type 3, this is going to be very simple and one of the most effective ones in my opinion. Is going to be buy side and sell side liquidity. Essentially what this is in basic terms is it's going to be the high and the low of a particular range. Now usually there's going to be internal liquidity and there's going to be external liquidity. If you really want to look for the most highest probability ones, you're going to be targeting the external liquidity. Now just to briefly explain that, whenever you've got a move over here, you can understand that there's going to be little legs in there where, for example, you've got this type of price action. Looking for these types of highs over here, for example, that's all going to be internal. When you're looking for the external one, it's going to be of that primary pre-sub structure right at the top and then also right at the bottom. Again, like all the other pieces of liquidity, the same applies for both buy trends and also sell trends as well. So let's get into this quick little example of how we can actually use it. Now, as you can see over here, we are particularly running down in this little downtrend. So as price is pushing downwards, we've got this high, low again. We've got a fresh high over here. And then as we start to move, we've got another low, another high, and then price continues all the way down to the bottom. So when this particularly happens, you can only assume that in the downtrend, you're going to be getting some sort of pullback and then a continuation. So this external high over here is going to be very important. If we exceed it, that means that usually we're having a change of character to the upside. However, if we respect it, that means that we are still going to continue to the downside. Now, in this particular example, what actually happened is something like this. We got to this particular high over here, and rather than closing above this area, such as this, we actually just swept this liquidity over here. As soon as that happens, what that essentially is showing me is that we are going to be moving very aggressively to the downside, because essentially this area has now been respected. Now, it's not usually respected in this way where we might hit the order block and drop. Instead, we're just going to sweep it ever so slightly and then continue to the downside. Again, how can we actually get into a move? It's all going to happen on the lower time frames around this area. As soon as we sweep it, that first sweep over here, that's where we're going to think, all right, cool. All we're going to look now for is a minor change of character, a pullback, and then a continuation. And that's exactly what you do. Again, a similar type of scenario over here. Here we had the buy side liquidity that was swept, but in this scenario, we've now got the sell side liquidity that was swept. As you can see, this area over here, not only did we have that, we also had equal lows. As we got to this kind of area, we now swept this zone over here, started to push upwards, little pullback, and then a continuation. And that is how you get in on these moves. As soon as you see external highs and external lows being swept, that's where you got to start thinking to yourself, all right, cool. What can I expect for the next few moves? Okay, so now moving on to our final point over here, and it's all going to be about imbalances. In my opinion, a lot of people actually skip past these, but it's one of the most important areas when it comes to liquidity. Whenever I'm looking for a trade, it is very, very simple. If I see an imbalance above my particular area, or if I see the imbalance below my particular area, I know that eventually price is going to gravitate towards it. Why is that? Is because they essentially act like the magnets in the market. So I'll just show you a particular example over here. As you can see at this point over here, that's where we started to break a structure to the upside. We then had this imbalance over here, and price, as you can see, went to around 50% of it. As it started to push upwards even further, we got again this break of structure. At this point over here, that's when you can finally start to look for your entries. So say, for example, you got an entry around this kind of point. Where are you actually going to aim in terms of your take profit? Well, it's very simple. It's going to be filling this entire imbalance over here. So many times this happens in the markets. And the thing is, not only can you use it for your take profits, but you're also going to use it when identifying if your trade is going to be in danger or not. Now, as we've looked now at the 4 main types of liquidity, we're going to get into the examples of how we can actually use this when it comes to our entry models, aligning it with time as well. So let's get straight into that. And so now we're getting straight into it. How can we actually link up liquidity and time as well? Now, one thing you must understand in the day is When are the particular times that price moves the most due to its volume? Well, it's very simple. If we have got 24 hours in the day, and we can split that into three main parts. We've got the first part, which is going to be Asia. The second part, which is all going to be London. And then the third part is all going to be New York session. Asia, as we know, is on one side of the world where most of the biggest traders in the world from London and New York are not going to be awake at that point. So we can only assume that at some points in the day during London and at some points during the day in New York, that's when we're going to get the most amount of volume. So before we get into any bits about liquidity and everything, it's just the most logical thing that you can think in your head. We're obviously going to get the most amount of movement during London and in New York. But in particular, there are times where we can actually get overlaps where this works very, very effectively. Now, from my experience, and I can only say this from my experience, and how can I say this as well? I've backtested numerous years of data. I've got years of journal data in my Notion template as well that I keep for myself. You know, so much data out there that has literally proved to me these particular times in the day are there for the highest quality setups. So we're going to start in London session. So during London session, or just before London session, that's where we're going to get something. And by the way, I'm going to be doing everything in UK timing. So we're going to start off with the first one, and that is going to be 7 o'clock in the morning. And that will be the Frankfurt Open. Now, when I'm talking about the Frankfurt Open, why is this so effective? Is because typically that's when we're going to see reversals. Cool. So we've got the first one of the day. The second one of the day is going to be 8:15 in the morning. And that again is going to be London session. So this one is going to be the London Open. In particular, at this point, one thing I can note about it is price will be explosive. The one good thing that we can actually do at this point is, imagine this, if you get a liquidity sweep at any of these points, that's when you can potentially look for these areas at these exact times. And I'm going to show you an example straight after as well. Then another one during London session is going to be 9:30 a.m. And one thing, I like to call this the London slowdown. So at 9:30 a.m., that is where we get a reversal or a continuation. So I'm just going to show you what that even looks like. Say, for example, you've had price moving for Asia, something like this. We've now had the Frankfurt reversal. So that right there is 7 a.m. Then as price continues onwards, we get to 8:15. 8:15 over here. And that is where price decides to explode. It then takes the other side of liquidity. Once we get to this point, that is where we see the 9:30 reversal time. And that is where price starts to slow down all the way up until New York session. Now, just looking at this, this is a very simple model that you can actually use during New York. It doesn't happen all the time, but at least one of these times in the day, there is going to be a significant piece of price action. So that is going to be it in terms of the London session. So please take notes as I'm going through this. Now, the second thing is going to be all about New York session. Again, this is all going to be in London, in UK timing. So when we're looking at New York session, it's going to be very simple. The first time is going to be 1:30 p.m. And that is going to be New York overlap with London. Then we are also going to have another point. And by the way, this can be either a reversal or a continuation. I would say New York session is definitely harder to trade than London, especially if you are a beginner. Then we also have 2:30 p.m. and that is going to be just New York. And again, it's going to be a similar type of thing. We either get a reversal / a continuation. And then finally, the final point of the day is going to be 4 p.m. And that is going to be what I like to call the London close. And that right there is typically a continuation point, a reversal point. Reversal. So how does this actually look like? If we were to continue what we had earlier, we obviously had Asia range. As we pushed on further, we had the low of the day, the continuation at 8:15, the reversal at 9:30, and then as price decided to continue, we might get some sort of sweep of, let's just say, the highs or whatever. Let's say, for example, this is 130. 130. As price continues, one thing I will know is either you will get 130 or you will get 230. It really just depends on the way the day's moving. And then finally, at the end of the day, let's say it expands all the way down to the downside. At 4 o'clock, that's where you get a slowdown in price. So we have now looked at the London session, typical entry model that we can actually look at. But now this is also the New York session as well. So a lot of detail that we've gone through, but just to quickly recap, there are three main sessions in the day. You've got Asia, London, and New York. The overlaps between London and New York are typically going to be the best setups in the day. For London session in particular, 7 o'clock is a key time, 8:15 and 9:30. For New York session, you've got 1:30, 2:30 and 4 o'clock. And typically, this is what it will look like on a perfect day. Now, again, you're not going to get that every single day, but on the days that it does happen, you have to stay vigilant and you have to keep looking at the charts. Now, how do I actually use this to my advantage? Because we've talked about liquidity in the start of this video. I've shown you numerous examples. We've now talked about the timing of the day as well. So how can we actually perfectly link these 2 points together? Time and liquidity. That's what we're going to look at in just a second. So when it comes to time and liquidity, what the key thing is here is this. Let's say, for example, we've got Asia range, nice and tight over here. And as price expands to the downside, at 7 o'clock, that's where we decide to get our Frankfurt reversal. So again, this is 7 a.m. As soon as we get this sweep of liquidity, which is going to be the sweep of the previous session, that is going to be of Asia range, for example. At this point, that's where we finally look for our setup. We look for a change of character, then a pullback, and then finally a continuation. And it's as simple as that. We look for that engulfing candle to the upside and we enter something like this. Entry, stop loss, and then we go for our mechanical take profit. I would always advise, if you are trading intraday, going for that 1 to 3 risk to reward, and then obviously you can take partials or whatever it is. But this is something that we can actually look at. Let's look at another example. This is going to be for the Asia sweep. Now let's say, for example, we have something for London as well. All it's going to look is something like this. We've got Asia happening, looks pretty nice and consolidating. We've got the sweep of the bottom. As price continues onwards, let's say this is just London session over here. New York session is now kicking in at this point over here. London session, nothing has happened. Price has been very slow. What you might get in New York is something like this, where price literally just sweeps this area at, let's say, 130/230 during New York session. At this point, what we will then do is look for, again, that minor change of character, the pullback, and then finally a continuation. And as simple as that, the engulfing candle. And right there is going to be our entry again. Looking again for that 1 to 3 entry over here, and our stop loss just over there. So 2 little examples just to show you how you can get the Asia sweep, and then also how you can get the London sweep. Now, there are a few other things that we do have to talk about when it comes to New York session and everything, but I'm going to leave that for another video, just because there's a lot of detail to get into when we're thinking about the whole scope of the entire day, the previous day, previous weekly liquidity, all that kind of stuff. We'll do that some other time, but it's going to be as simple as this. Now, you can probably see just in the diagrams that we've drawn so far, there's a lot of value in looking at not only liquidity sweeps, but also pairing that with timing as well. Now, what I'm going to do, I'm going to get back on the charts in just a second, and I'm going to show you one key example where this has happened, and it's going to be a live example that I've taken just a few months ago. So let's get straight into that. And so here we are. This is pretty much the example of the trade that we were actually in. As per usual, I'm always going to send in the live entry before that I sent out to the group, and then also the outcome of the trade as well. Now, in this little example over here, it's a GBP USD trade. We managed to make 1 to 5 risk reward on this one in particular, and it was very, very simple, following every little thing that we've just talked about for the rest of the video. So what we're going to do first of all is just add the session indicator. I'm going to be doing a complete video on that and just showing you the best settings and everything at some point. But this is pretty much going to be it. So just a few key little lessons that we talked about in the past. We've got the Asia range. That is pretty much the setting of the day. If we've got it nice and tight and have that consolidation, that's when we know, all right, we might get some good price action for the rest of the day. What did I say in the beginning? Frankfurt at 7 o'clock is very key. 7 a.m. reversal. So instantly we've got that 7 a.m. reversal in the morning. And that is where price already is starting to go upwards. Then as price continues all the way up, that's where we start to get into where? Into our London session. At exactly 8:15, that's where price starts to, or in this example, it doesn't really do that. But when it comes to around 9:30, exactly over here, you see what I'm talking about when you have to look at liquidity sweeps at a particular point in time. As you can see over here, we've got the Asia range. We've swept it at the bottom, proceeded all the way up to the top. The previous daily high has now been swept already. So previous daily high swept. Not only that, we also get that high being swept again. So the previous high swept too. And what happens at this point? This is where we get the 9:30 reversal in London session. So at that point, what is the entry model that we're always going to be looking at? Well, it's very simple. Let's say, for example, we've got the high over here. We've swept it. You're going to look for that change of character, the pullback, and then the continuation on one of the engulfing candles to the downside. This is typically what we like to look for. But in this example, what we actually got was very, very nice and simple. As price swept it over here, price decided to give us this minor change of character at this point over here. So that is what we like to call the change of character. Then what did I say? Refer back to the iPad when I was drawing it up earlier. We've got the pullback. And then what do we have next? It's all going to be about that final golden confirmation. Oh. It's all going to be about that final golden confirmation, which is going to be engulfing candle. As soon as the engulfing candle closes to the downside, completely printing out this move where we've got liquidity sweep of the previous day, liquidity sweep of the previous high as well, a change of character, a pullback, and then finally an engulfing candle to complete the move. That's where we enter on a market execution. And just a little reminder of the screenshot that we got before and after. Again, it's going to be on screen just for a second. Where were we aiming for our take profits? It also refers back to example number 4 of the liquidity. It's all going to be about the imbalances. So in terms of the imbalances, where do we see them in the market? We see them at this point over here. We also see them around the bottom of this range at this point over here. I just decided to go for this point where it was just in line with the order block as well. So you see this area over here. That's particularly where I was aiming for, and essentially took a 1 to 5 risk to reward on this trade overall. So guys, I hope you can actually see just how simple this whole piece of execution is. You know, when looking at the markets, yes, you might think there's liquidity sweeps everywhere, but has it really occurred to you, you know, I should be looking at them in conjunction with timing as well. So that's going to be it for this little example over here. And so here we are. We've looked at liquidity, we've looked at timing, and we've combined them to show you how you can actually get to an A+ setup. Now, the one thing I've got to say, there's a lot of information still left out of all of this. And what I've gone and done is I've made a completely free strategy PDF guide down below. So if you just click on one of the links down below this video, you can have access to that for completely free. And by the way, if you're interested in one of the next videos over here where I talk about my A+ setup, click this little link over here and you'll be on to the next one. So guys, take care and I'll see you all in the next one.